Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to talk about the risks for NIO and other Chinese companies due to the Holding Foreign Companies Accountable Act, which was passed yesterday by the US House and will be signed into law by the President soon. The law would impose restrictions on Chinese companies listed on the US exchanges. Furthermore, companies have to certify that they are not under the control of a foreign government. The bill's sponsors say the aim is to ensure foreign companies traded in America are subject to the same independent audit requirements that apply to US firms. The problem with Chinese companies, though, is that they are all controlled by some degree by the Chinese government, and that the government doesn't allow the companies to comply with the act even if the company itself wants it to. Chinese companies will have 3 years to comply with that law. I'm expecting the same game between the US and China that they have already played in regards to the trade war. Deal, no deal, and so on until the last minute. Basically, the Chinese government has to give in and allow their companies to be audited by the Public Company Accounting Oversight Board. We have to see if the Chinese government will allow it and lose face to the US. I can imagine the Chinese government staying on their hardliner course and forcing a delisting of Chinese companies from US exchanges. That would lead to second offerings in Hong Kong by many of these companies like NIO or Xiaopeng. And China would profit from this migration because the Chinese economy will grow into the new superpower in the coming years. Many Chinese companies will thrive and do better than US or European companies, for example, and the international capital will flow into these stocks through Hong Kong and not the US anymore. The NIO shares investors own currently are ADRs, American Depositary Receipts, and they are issued by American banks. In case of a delisting, NIO's ADRs will most likely trade on the OTC market, or investors will be able to exchange their ADRs to ordinary shares if NIO is also listed on a foreign exchange. Worst case scenario will be if ADR holders will be forced to sell, which is very unlikely in my opinion. A bigger risk for NIO investors would be to lose a lot of liquidity, which could lead to a lot of funds or big investors to slowly sell their shares before a delisting actually happens. Some institutions or funds may only be able to invest in stocks which are listed on the US exchanges. There is definitely some risk involved in owning NIO ADRs, but 3 years is a long time, and I think the market participants will forget about this in the next few months and concentrate on the fundamentals of the company, which look very promising for the future. As an investor, we have to now observe what the big money is doing in the 13F filings of NIO. If the institutional investors like Bridgewater or Baillie Gifford start to sell slowly while the retail investors is buying, I would be cautious. Until then, the stock price will follow NIO's delivery numbers in my opinion. If NIO can continuously improve the numbers, the stock price will follow. But don't be surprised when the stock price corrects sharply after a huge run-up. As I explained in my previous NIO video, the smart money is selling when the valuation gets out of hand. The stock price begins to decline, the media sees this and comes out with the news that fits the narrative, and the little retail investors that didn't do their proper due diligence sell out of fear, which while the smart money is buying back in at much lower prices. If you check out NIO's stock price yesterday, this is what exactly happened. The stock dropped to a low of $38.43 just to run up to almost $48 again. The most important thing to make money is do your due diligence and keep an eye on the fundamentals. Either hold your shares tight until the fundamentals change, or at times take some profit like the smart money when valuations are getting out of hand and the risk-reward ratio worsens. If you like this video, hit the thumbs up button to support the channel, subscribe, comment and share the videos. Bye guys and see you in the next one.